All right, it's time for the hot topic of the hour. The economy under President Trump's second term showing promise after a better than expected read of third quarter GDP, 4.3%. It's nearing 5%, something Navalier and Associates founder Louis Navalier told Maria would happen. He told her just last week. Watch.
What is your assessment of the macro story? How do you want to be invested in 2026, Louis?
We're going to hit 5% GDP growth. We're running 3.5 to 3.8 now, but they're going to be revising it up because the trade numbers, the trade deficit's the lowest in 5 years. The exports the second highest ever recorded with low oil prices. So that's going to big upward revisions. Obviously, a lot of the growth was onshoring, but even and the data centers. But if you look at the data centers, their order backlogs are up 20% quarter over quarter. So we're going to enter the new year with we're going to hit 5% GDP growth.
The Wall Street Journal reporting about the Trump rebound, claiming it could be the most underreported story of the year. James Freeman writing this, quote, "Today brings more evidence that the benefits of the president's regulatory and income tax reductions are still overwhelming the costs of his trade taxes in perhaps the year's most underreported story." Mr. Trump took office during a quarter when the economy was shrinking, and in the 2 quarters since has presided over robust growth. Treasury Secretary Scott Bessent once again reiterating what's to come in the new year. Here he is on a recent podcast reflecting on the year that was.
I would categorize 2025. We had some important victories, some important policy announcements, some important movement. But as I've described it, 2025 was setting the table, and especially on the economy, I think the feast and the banquet's going to be in 2026.
Meanwhile, the White House Council of Economic Advisors finding just how different economic life is between red and blue states. A new report from the past 12 months shows overall inflation in conservative states is lower than it is in liberal states. Want to get your reaction on this, Michael? It makes sense to me. Policy certainly dictates economics, and so therefore you would have lower prices and lower inflation in states that are being more conservative.
That's very true. You know, I just want to take a minute and look back. You know, when we started this year, the Congress was at a razor-thin majority for the Republicans, and a lot of people said that Donald Trump would not be able to get his agenda through. Obviously, we've had lots of controversy about that, but he has. And then you take a look at the markets. You know, in March, 9 months ago, we had a sell-off. The Dow was at 37,000, is now at 48. Nobody predicted that kind of a movement except for Donald Trump and the administration. And now, again, because of the things that were put in place with the big, beautiful bill, we have this great momentum going into 2026. This is awesome, but still, it's imperative to point out the policies that are working, the policies that aren't working. Just the inflation numbers that we talked about indicate that the policies of the blue states are not working as well as the policies for the red states. And that is something that has to be addressed, because economic vitality should be something that all Americans should experience, not just folks in a political state, either red or blue.
Yeah, you make great points. When people ask me, Jamie, what am I expecting for 2026, obviously, following the markets and the economy very closely, I say this. I say I don't have a crystal ball, but I can tell you that this year, even though it was a little turbulent, was better than the last 4 years we experienced under Joe Biden. And if Trump's economic agenda comes together as expected, then 2026 should be quite prosperous. Your thoughts?
Oh, my goodness. I mean, you know, this year has been incredibly busy for me. I mean, the president sets the tempo. He runs at a very, very high rate, and everything he's doing is sort of corresponds with that. I mean, if you think about what's happened, transpired, there's been a tariff regime, there's been, you know, there's been immigration reform, there's been the big, large tax cut and the permanence of the first Trump tax cuts. And we're just getting started. The AI infrastructure boom, trillions of dollars of investment. It's been an amazing amount of work that's been done in the last 10 months. And I don't think that it's really over yet. I think this is just the beginning. And you can see there's a reason why the stock market is at all-time highs, because you see that resurgence of growth. And it's not just maybe it's actually real because the numbers are actually playing it out. And I don't think that that's going to change. In fact, in 2026, it's probably going to get a little bit better. And you know, when the U.S. grows, the rest of the world grows. And you're actually seeing that not just here, but everywhere. And investors are actually making money in the entire market with most stocks and most companies, which wasn't the case in the last couple of years when it was really isolated to 7 or 8 companies. You're actually seeing a completely different circumstance where you see sectors really doing well, industrials, materials, financials. I mean, you name it. It's actually doing well, and there's a reason for it because the policies that are being put in place promote growth. And when you see growth, you make money. And when you make money, it feeds on itself. It's the virtuous cycle. The wealth effect is real, and it's actually happening to people right now. And you're seeing it in consumption. You're seeing it in spending. People may not feel perfect yet, but they're certainly spending like they do. And I think that that's going to continue.
And one of the things that contributed to volatility this year was the president's tariff policy. You think back to what we saw in the stock market in April after Liberation Day, but how tariff policy evolved throughout the year. Now we're at a place where inflation never came the way the Democrats said that it would. Inflation now at 2.7%, according to the last CPI reading, and this growth of 4.3% for the first print on third quarter GDP is pretty incredible. So you see that sometimes policy takes a long time to kind of come together, Michael. And it's not just tariffs in general or the revenue that they've initiated. It's also this idea of putting us back in charge on the global stage, whether it's the economics of it or it's the foreign policy aspect of it. We were really losing our foothold.
Yeah. When you sit back and you take a look at how the media has portrayed this entire economic agenda for this administration, it's always been with an incredibly negative outlook. There's no way, these tariffs are going to destroy the economy. Look at the sell-off. And there's what people should really be expecting now is that this has taken time. It doesn't happen overnight. But if you put into place these long-term economic guardrails so that you can put things together, it's going to benefit the entire country.
Yeah. We are just getting started this hour.